Hello, I am Jeff Panic with Balanced Wealth Partners. Most people make at least one Social Security mistake that can quietly cost them tens of thousands of dollars over their lifetime. And they do not even realize it until it is too late to fix. If you are in your late 50s or early 60s, you are probably hearing advice from coworkers, family, and friends about when to just go down to the Social Security office and turn it on. The problem is, Social Security is not a one size fits all program, and a wrong move here can permanently shrink one of your most important retirement income sources. In this video, I'm going to walk you through the 5 most common Social Security mistakes I see, share a quick example of each, and give you a clear way to avoid them. I will also show you where to go in Chapter 6 of my book, Your Future is Now, Your Blueprint for Solving Your Retirement Puzzle, if you want to go deeper on your own numbers. So let's get started. Let's start with the big one, claiming your benefit at 62, just because that is when you are first eligible. A lot of people think, I've paid in my whole life, I want to get something back before Social Security runs out. So they grab their benefit at 62 without running the numbers. In Chapter 6, I walk through a hypothetical retiree, Robert, who could have received about $1,907 per month at his full retirement age. Because he claimed at 62, his actual check dropped to around $1,343 per month. Over an average lifetime to 81, that early decision cost him roughly $42,930 in lost benefits. And if he lives to 90, the lost income balloons to more than $140,000. Before you file, run a claiming analysis that looks at your health, your life expectancy, and whether delaying past full retirement age to 70 makes sense for you. Chapter 6 of my book, When and How to Take Social Security, walks you step by step through this decision and shows you how delaying can increase your monthly benefit by about 8% per year between full retirement age and 70. And claiming early is just the first trap I see people fall into. The second big mistake is viewing Social Security as an individual decision rather than a household decision. In the book, I share Bill and Samantha's hypothetical situation. Bill has a strong earnings record with a projected full retirement age benefit of $3,822 a month. Based on her work history, Samantha's own benefit is closer to $1,100. If they both just file on their own records without looking at spousal strategies, they leave a lot of money on the table. By coordinating so that Samantha uses a spousal benefit, her monthly check increases to about $1,911. And together they can significantly improve their lifetime income and survivor protection. If you are married, widowed, or divorced after at least a 10-year marriage, you need to evaluate spousal, ex-spousal, and survivor benefits before filing. Chapter 6 breaks down how spousal benefits can pay up to 50% of a higher earning spouse's benefit, and how survivor benefits can replace up to 100% of a deceased spouse's benefit, depending on timing. Once you look at Social Security as a family benefit instead of a solo decision, the next mistake becomes easier to spot. Mistake number 3 is turning on Social Security while you are still working and being surprised when your check is reduced or withheld because of the earnings test. In Chapter 6, I explain that if you claim before your full retirement age and keep working, there is a strict earnings limit. In 2026, for example, if you are under full retirement age and earn more than $24,480, Social Security will withhold $1 of your benefit for every $2 you earn above that limit. In the calendar year you reach full retirement age, a higher earnings limit applies, and after full retirement age, the earnings test goes away. If you plan to work in your 60s, build your Social Security decisions into your broader retirement income plan. In Chapter 5, where I outline the various income sources in retirement, and in Chapter 6, I show how wages, retirement account withdrawals, and Social Security interact so you can choose whether to delay benefits while working or file with a full understanding of how the earnings test will affect you. Even if you're not working, there is another tax-related mistake that can quietly erode your benefits. The fourth common mistake is assuming Social Security is tax-free. For many retirees with other income sources, that is simply not the case. In the Social Security chapter, I walk through provisional income, which is how the IRS determines how much of your benefit is taxable. For a married couple, once provisional income exceeds 32,000, up to 50% of your Social Security benefit can become taxable. Above $44,000, up to 85% of your benefit may be subject to federal income tax. So, a couple drawing Social Security plus IRA withdrawals and investment income can be surprised by a much larger tax bill than expected. Build a coordinated income plan that looks at which accounts you draw from and when. Chapter 5 and 6 together show how to blend Social Security, pension benefits, retirement accounts, and investment income in a tax aware way so you can potentially reduce the amount of your Social Security tax over your lifetime. The last mistake I want to cover is the one that shows up before you even file. The fifth mistake is assuming the Social Security Administration has your work history and earnings perfectly recorded and never checking. In Chapter 6, I show why it is so important to create a My Social Security account online and review your earnings record. If you have missing years or incorrect earnings, maybe from a job change, name change, or self employment, the formula that the Social Security Administration uses to calculate your retirement benefit will be off. Over a 20 or 30-year retirement, even a small error can translate into thousands of dollars in lost benefits. At least a few years before you plan to retire, log in, download your statement, and verify your earnings year by year. In the book, I include links and a sample statement so you can compare what you see with what Social Security has on file and fix problems early, rather than discovering them after you've already filed. So, those are the 5 big mistakes I see over and over again. We covered claiming too early, ignoring spousal and survivor options, filing while working without understanding the earnings test, overlooking how Social Security is taxed, and never checking your own Social Security record. Each of these is avoidable if you take a little time up front to plan. Chapter 5 and 6 of Your Future Is Now pull all of this together into a clear framework you can use with your family or your advisor. If you are within 10 years of retirement and any of this sounded uncomfortably familiar, I wrote Your Future Is Now, your blueprint for solving your retirement puzzle specifically for you. Chapter 6 dives deep into Social Security timing, spousal strategies, and the tax angles we only had time to touch on today. If you would like help walking through your own Social Security options and retirement income plan, use the link in the description to schedule a short introductory call with me. We will review your statement and other income sources and start building a plan so you can retire on your terms rather than leaving it to chance.